So in this video, we want to talk about Koss Corporation, and it was a banger last week, that being the week of 4th of July. However, prices are off the recent highs by almost 50%, so a 50% retracement. So what got into the spike in price? Let's get into the news and then we'll get into the analysis. So when it comes to social media frenzies, securities and meme trader Keith Gill, also known as Ron Kitty, do not represent the only avenue for extreme upside. Rather, speculation about what Gill could buy next can be just as powerful. Consider the case of consumer electronics specialist Koss, which went skyrocketing last week. Now, some retailers speculate that Ron Kitty would acquire Koss stock or around Independence Day. Recently he made an announcement of his stake in Chewy. Now, given Gill's history of obscure social media activities leading to significant investment positions, excitement over the consumer electronics firm soared. He went live on YouTube a couple of weeks, and that was pretty much a dud when he was talking about GameStop, and people were trying to get some intel, and he did not provide any intel. However, other voices expressed skepticism, noting that Koss is primarily a headphone manufacturer. Unfortunately, Gill has yet to make a public post about Koss stock directly. As a result, speculators may have become disheartened, hence the losses on Monday. Now, Steve Sosnick, who's a market strategist at Interactive Brokers, had this to say: there are absolutely no fundamental reasons why Koss might be worth 4 times what it was at the beginning of the week. Regarding the fundamentals, it's worth pointing out that according to Yahoo Finance, Koss stock trades at 10 times trailing year's sales. However, the average revenue multiple between the first quarter of last year and this year sat at only 2.4. Sosnick and other traders stated that almost 50% of the company's 9.2 million shares are held by insiders. That means that the public float is quite small, allowing the modest purchasing uptick to result in robust swings, but it could also cause the opposite in deep retracements as well, which is what we have going on right now this week. Again, prices are off roughly 50%. And what I want to bring to your attention is this weekly buyer's level at $3, which is about $7 away. But we had a rallying price, a basing candle, and this is a gap. However, the gap represents an extended range green candle. So that makes it a leg in, basing candle, leg out. This is where some of your volume's at, but you can see the big volume is in this candle right here, which was established again last week. Let's take it down to the daily chart, and that big candle that we just saw on the weekly chart was a result of a gap higher. However, the trading to the left of it tells me that there's no significant imbalance with the exception of this huge pump in the price. So the best level to get long if price was to have a huge retracement. Again, look at this price structure on the daily chart. You had a rallying price, several basing candles, and then a rally out. Price pulled back but couldn't get quite to that level before shooting higher. You do have the 200-day and the 100-day about to leave this zone here. So that's going to serve as your offensive line, and this weekly buyer's level being your quarterback. So you're somewhat protected. Scrolling back out to the weekly chart, some levels of interest is going to be this resistance where price sits right now at $10, which is also around the whole psychological number. Although I could say you have resistance here, which coincides with more so where the rejection wicks stop. I like this $10 level as well. However, you can't ignore, again, this spike in price somewhat invalidates these rejection wicks and these levels, but price has memory. So let's see what happens over the remaining rest of this week. Price now can move further down because this extended range candle signifies that there are no buy levels. You might have a pause at the $7 level which is where you had a pivot high. But the way to play this is really just watch from the stand lines. If you wasn't able to get in prior to that, and if you were in, definitely take some off the table. But this is too difficult to try to trade, in my opinion. Thanks for watching. Subscribe. Please like the video.